Hi everybody, this is Bob Iacino from Path Trading Partners along with my co-founder Mike Arnold, and this is part 2 of Trendlines for trading cryptocurrencies and traditional markets, and part 2 is titled Path Trading Trendline. So let's go ahead and get started. One of the main problems of Trendlines that we didn't talk about in the last video, which was part 1, is that traders are very inconsistent in drawing their trend lines, and that's why they get less respect than they should have. One of the challenges traders have when drawing trend lines is that they don't always follow the same set of rules when drawing them. One trader will have a trend line in one place, one trader will have it in another place. This happens a lot on other chart types, especially candlestick charts, which is what we do our main analysis on. Traders sometimes include the shadows and sometimes ignore them. We call those trend lines best fit lines instead of trend lines. When you ignore the shadows, that's called a best fit line. When you include the shadows as your highs for downward sloping or as your lows for upward sloping, we call those trend lines. The other ones we call best fit. So a while back, Mike and I sent a chart out to 5 different traders, and we asked them to put every valid trend line on the chart. Mike then took the results and put all those same trend lines on one single chart. This is what it looked like. And this is what we mean by traders draw them differently. Every single one of these crazy trend lines on here, and they're all valid if to some trader for some specific reason, was sent to us. And this is only 5 traders. If we would have sent it out to 50 traders, you probably wouldn't be able to see the chart behind all the different lines. But this illustrates how hard it is for traders to be consistent in the way they draw trend lines if they don't learn a consistent method. Now, you should have a consistent way in which you draw your trend lines. There's a few ways to do it. We're going to go over a couple of those. Here again is a chart, and this particular chart has one very clear downtrend on the right side of the chart and one very clear uptrend on the middle part of the chart. So let's take a look at the way that some traders could have drawn the trend lines. Here we've got what I would call a best fit trend line. This is a pretty valid trend line depending on how you draw them. But if you include the wicks in it, it would look more like this. Okay? If you want to put a shorter term trend line on it on the upslope, you could have this particular trend line in, which would be a traditional trend line in the way that Mike and I would draw it. Or you could draw the uptrend this way, which again doesn't take into consideration these smaller wicks here because it's being drawn from this point to this point. Still a valid trend line, but doesn't look anything like this one because you can see this trend line was broken by this point already. Now we move on to the downward sloping trend lines that you could draw here. So here you've got one, and again, this would be valid. Here's your initiating point, here's your defining point, although it's been broken by these wicks and it's not extending all the way down. Here you've got another version of it. Now it includes these wicks and stops at this point, right? This particular trader didn't see a need to include these particular candles. You could also draw it this way, which includes these, but still doesn't include this extra breakout, but now you're including this candle here. Or you could extend it even further and draw it this way, which would be a little bit closer to the way that I would draw this one, until of course you take into consideration these extra price action that's happened to the right. So again, this particular chart shows you several different ways that you can draw trend lines, and none of those trend lines I showed you was wrong. All of them were just established through different sets of rules. So I said there were trend lines and there were best fit lines. So let's talk for a second about best fit lines, and then I'll turn it over to Mike to show you how to draw traditional trade trend lines. Best fit lines are not as significant as trend lines because not as many people will have them drawn the same way. One thing that's true about price action analysis and technical analysis, the more people are looking at something the same way, the more likely it is to become self-fulfilling. Many aspects of a trend line providing support or resistance is due to a lot of traders having them drawn on their charts and watching for trades in those areas. Again, becoming self-fulfilling, that's kind of a big deal in price action analysis. So here we see an example of a best fit line. So the best way to explain a best fit line is on a candlestick chart specifically, but it applies to bar charts as well. You draw a general trend line that shows direction. You don't necessarily take into consideration whether a wick has broken. You basically ignore the shadows or the wicks. If any of you are not familiar with candlestick terminology, this is the body of the candle, and these black lines above and below are called shadows or wicks. When you're drawing a best fit line on a chart, you're just trying to get a general idea of the steepness of the trend, and you're not trying to be specific about the shadows or wicks. You're ignoring the shadows or wicks when you draw it. That's called a best fit line. We deal more in trade trend lines. We do use best fit lines for certain parts of our strategy, but we deal more in trade trend lines. And when you're seeing our analysis on some of our older videos, you'll see trade trend lines. To help address the issue of a consistent method to draw and use trend lines, we're going to now consider a different way to draw trend lines. Those trend lines are called trade trend lines. We call them this because they show us trades. Trade trend lines only require 2 points to be properly drawn. I'm going to go ahead and turn it over to Mike to show you how to draw these trade trend lines. Mike, it's all yours.
Thank you very much, Bob. So, trade trend lines. As Bob mentioned, to draw a trade trend line, the required 2 points are the initiating point and the defining point. We only have 2 points, which means we can draw the trend line sooner than a traditional trend line can be drawn. The initiating point is similar to the traditional trend line initiating point and is the point from which the trend line initiates, thereby called the initiating point. The second point required to draw a trade trend line is called the defining point. So, how would we draw a valid upward sloping trend line? We'd start with our initiating point right here. We have a potential defining point because until we see that the next candle does not touch it, once we see that, it is confirmed. So let's go through that again. Potential, so we could theoretically draw a trend line now, but if the next candle touches it, it wouldn't be a proper defining point. So we can draw our potential trend line. Next candle does not touch it. It's now a confirmed defining point. Initiating point, confirmed defining point. That's a valid upward sloping trade trend line as defined by path trading partners. Here's an example. Initiating point, defining point, and then you can see as it comes down, this could initiate a potential short trade, or could be it broke through it, but if it bounces back up, it could be showing that now we have our 3 points, which most people then say, okay, now we have a valid trend line. We've already drawn this with just 2. Here's a valid downward sloping trend line. Initiating point, potential defining point right here. You can draw our line. It's now confirmed the next candle does not touch it. So that's going to be a potential resistance area and could potentially trigger a long trade at some point. Here it is on a chart, initiating point, defining point, and the market continues lower. Now, if the market were to come back up and get above this, it may trigger a potential long trade, as I mentioned. Defining point becoming a new initiating point. So here we have initiating point. Here we have a defining point that's confirmed because the next candle doesn't touch it. And now, one of the concepts we use is an old defining point can become a new initiating point. So we have a potential new defining point over here. We have a old confirmed defining point, which is now the new confirmed initiating point for our new trend line. And then our confirmed defining point of the second trend line is confirmed once we see the next candle does not touch it. So now you have 2 properly drawn trend lines. You have the longer trend line and the shorter trend line. And you can see this on a chart, initiating point, defining point, which becomes a new initiating point for a trend line. Then we have a defining point of the second trend line, which can become an initiating point for a third trend line. And now you see we've drawn 3 trend lines. And even a 4th trend line could have been drawn on here. This being the new initiating point, this would be a valid defining point. So here's a downward sloping one. Initiating point, confirmed defining point. So we have our first trend line properly drawn. We can then draw on a second trend line. We don't know if it's valid yet till we look at the next candle and see that it does not touch. So now we have a second confirmed defining point, which may eventually become a new initiating point for another downward sloping trend line. So here on the chart, initiating point, defining point, then that line's drawn down to here's the defining point, and then that becomes a new initiating point, defining point, and then as the market proceeded through here, it may have triggered some trades, but these older trend lines will come off. And you can see on this, the longest one, we just hit it to the end and then it actually held. So a lot of people would say, all right, now we'd have a valid trend line. We had it drawn way back here and it was confirmed here. Turning it back over to Bob for the final wrap up.
Thanks, Mike. Again, follow us on Twitter at path_trading, like us on Facebook, and check us out at pathtradingpartners.com. Also sign up for all the free stuff on there. And please hit like and subscribe if you like what we're doing. Check out part 3 of this video for more information on trend lines for cryptocurrencies. Thanks for watching.